This interview is disseminated on behalf of Tiger Gold. I'm your host, John Feneck from the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. How are you, Don?
Great, John. Looking forward to another one.
Yeah, this is going to be an interesting one. Both of us haven't met Robert before, but I've been following this story as it's developed. They're in Colombia, and Denarius, of course, is a stock we both like. They're in Colombia as well, so it'll be interesting to get their take on what's happening down there and hear about their project. We'll bring Robert on in about 6-7 minutes. In the meantime, I just wanted to talk about some price action today and then turn it over to you, Don. There was some really interesting stuff happening in the junior space today. Triumph Gold, TIGCF in the States, TIG in Canada just caught a bid out of nowhere yesterday. I mean, it looked like a market order hit the stock. It went down to 45 cents US, a little lower. And then buying just started to ensue, and the thing closed around 55 today. So, this is why we talk to people about setting two buy orders if you're interested in buying stocks, because you never know what a seller is going to be out there in these thinly traded stocks. It's not at a 52-week high, but it's getting closer after today's action. Another one was Bear Creek, BCEKF. Like we commented today to our followers, hey, this thing's holding 58 cents. It seems like the sellers can't break 58. And it just rallied at the close. Like the last hour and a half of trading, it ran from 61 to 65 cents. I think it closed around there. That's knocking on a multi-month high as well, I think, which was around 70 cents. You and I both like that deal with them getting potentially acquired next week by Highlander Silver, which is HLSCF. Just in general, I think the non-farm payrolls today did very little to hurt our sector's efficacy, if you will. When that job number was announced at 130K new jobs, gold lost probably about 75 basis points on that news, and silver went down from up 5% down to up 3.75%. But both metals rallied as the day went on, and so did GDX and J, by the way. GDX and J got negative about an hour or two into the open, and then they just started to rally all day. I mean, really interesting that we're seeing this kind of resiliency on typically a number that would have really affected the sector if you're looking at a beat like that. So, Don, I'll turn it over to you.
Yeah, so kind of what I've been saying in the last week or two is that, we're going to get volatility, but overall, it's really just noise, because the bottom line is that gold is trending higher. And if you understand why it's trending higher, you understand why, kind of the winds that are back here. And so I just look at this year as more of a kind of ignore the news, if you will. So non-farm payrolls, gold going up and down. Like right now, silver went to 121, and now it went all the way down to 63, which is kind of oversold, and then it bounced back above 70, and now it's at 84. So it's in this trading range between 70 and 90. It will break. It will go higher. We have to think in terms of buying opportunity here. I always say, don't think in terms of short term. Don't think in terms of even 12 months. Think in terms, try to get some entry, but you're not trying to make money in 12 months. We're trying to win the prize here. And so, a perfect example was like 1911. They had a PEA. So they said that they were going to do 58,000 ounces. This is just their starting mine, right? About $1,900 ASIC. But they were using $3,000 gold. That was the number they used. So their payback was two years at $3,000 gold, which is a kind of a ridiculous number. So let's just say the gold goes to 6,000. That gives them an additional $3,000 per ounce. That's $180 million that they didn't count. And the CapEx is $60 million. So basically their payback goes from 2 years to 3 months, 6 months. So the payback is a total nothing burger above $5,000 gold. I mean, it just goes less than a year. And everybody's selling the stock. I mean, it was off 11%, which is kind of ridiculous. But you don't think, so the reason why it sold off is because it missed. Like, okay, the people were thinking that the CapEx would be a little lower, the production would be a little higher. So a little miss and the thing sells off 10%. And yet mid-tier producers in Canada are uber rare. There's like one right now, one. Artemis Gold's like the only mid-tier producer right now that only produces in Canada. So we're talking, Canadian exposure, right? They're super rare. Next Gold is going to be one in about a little over a year, but they'll join the party. But 1911 is going to join the party a year from now too. Now they're going to be an emerging mid-tier, but they're going to get there fairly quickly. But my point is that gold producers in Canada are uber rare, and you got to own these things. And people are like, and who's selling that thing off 10%? That kind of, and near people thinking so near term, they're basically, okay, I'm not going to make money this month, or it's like, it's basically hot money, right? So basically people have a position in, and then they have a really tight stop, like 3%. I'm going under my stop, I'm out. Under my stop, I'm out, right? So basically, this is all traders. It wasn't really investors. It's basically people making money week to week, month to month. We're seeing some crazy valuations. Another company I want to bring up is B2 Gold. B2 Gold, their run rate right now for free cash flow is over $2 billion. Which is unbelievably insane.
Unbelievable.
And their multiple is 2.7. So their multiple is under a 3. And so their balance sheet by the end of this year is going to be pristine. I mean, they're going to have over 500 million on their balance sheet with no debt, and their dividend is going to jump. They pay 30% of the free cash flow out dividends. So they'll be paying a 5%. They're currently paying a 1% dividend, but by the end of the year, they're paying 5%. But nobody cares. It's like, oh, they're going to have $1 billion in free cash flow, and they're trading at a 2.7 multiple, or 2 billion free cash flow, and it's going higher. So this year they have some penalties, because of the financing. That all turns next year in 27, and their free cash flow goes up even higher after they get rid of some of these covenants that they have to use to build these mines. But it just shows you these valuations. So these miners are still really, really cheap. So I wanted to mention, we're talking miners. I just wanted to mention, like right now, like you guys are looking for leverage, if you will. But Silver Storm is one that I keep harping on today. I mean, it was up. Silver Mountain and Silver Storm have just been ripping. And then Silver Cove, those three. These are all companies that are kind of near-term producers, like within a year. And then another one that's near production is Andean Silver. So we get these companies that are like near-term producers that are undervalued, that everybody's ignoring because the sentiment is terrible right now. It's terrible. I mean, when you see this type of price action, I mean, the reason why Silver Storm is up 20% today is because it's so undervalued, because the sentiment's in the toilet and nobody wants to own these stocks. There's 4 stocks with some serious leverage still that kind of the market continues to ignore. The market thinks that silver prices are going down. These stocks are getting prices if silver's going down, and they're not going up. So if we're right, if silver prices are going up, we're going to be rewarded in a big way.
Yeah, that's great, Don. I want to leave it there and give people some symbols here. So I was just taking some notes. 1911 is symbol AUMBF in the States, AUMB in Canada. Next Gold, NXGCF in the States, NEXG in Canada. B2 Gold is BTG. It's a larger cap stock. Like Don says, it pays a div. It used to pay a lot bigger div. And so I could see it going back to that model. It got in the penalty box for that. It got in the penalty box for Mali, but this is one of the most undervalued, probably large cap gold stocks that I track too. I don't have all the symbols for some of the stuff that you just mentioned, like Silver Storm, Silver Mountain, Silver Co, and Andean. But we appreciate you guys checking out our show, and hopefully we can bring some of these ideas to you so you can do further research on your own to see if they fit your risk parameters or not. So with that, we'll bring on Robert Vallis, our guest today from Tiger Gold. The symbol is TIGR in Canada. And I did write down the new US ticker just for everyone. It's TGRGF.
Hi, John. Pleasure to be here.
Yes, welcome.
Thanks, Robert. Great to have you.
You bet.
So, would you be kind enough to give us maybe a 7 to 8 minute overview? You can use some slides if you'd like, just kind of going through the story for investors, and then we'll ask some questions.
Yeah, absolutely. Let me pull that up here quick. Tiger Gold, a new company on the block. We just listed in December last year on the TSX, as you said, and we're now listing and about to be traded in the US on the OTC, DTC. Cautionary statements, of course, encourage you to read, but really, I just want to move very quickly through this and leave plenty of time for questions. At the end of the day, we're all about fundamentals at Tiger. Fundamentally, our asset in the ground is quite strong. Our leadership as well, quite proven, quite strong as well. We've done a recent PEA just last year, just before we listed, on the deposits that we've inherited or acquired, I should say, and now have 3 drills turning on, and it was quite strong economics. And, Don, to your point about, silly price decks, that was done at 26.50, that PEA, which was long-term consensus September last year. So, but anyway, strong there, obviously, on that basis, on those fundamentals, we've already begun our quick move up the charts in terms of re-rating against our peers, and that is really what we're ultimately focused on delivering to shareholders as we continue to execute. We're looking for new resources, a lot of discovery potential, I'll show you in a second, as well as expanding what we already have and moving all of this ultimately through getting our arms around the size of the prize to then into engineering and then towards a construction decision over the next 18 to 24 months. The team itself, anchored by myself in the industry over 30 years, a mine engineer initially, long tenures with Barrick Gold, Yamana Gold, 15 years with Barrick, just under 9 with Yamana. So on. Our CEO, similar background. He's a world-class metallurgist, mine builder. So, and many others on our team, like Dr. Ruben Padilla's found many millions of ounces in Colombia with Anglo and other companies. So really, we've got a very strong team that's been there, done it, from finding, evaluating, acquiring, building, and operating mines all over the planet, literally. Now, of course, the Quinchia project that we're focused on here is in Colombia, in what is called the Mid-Cauca Belt here. I call it elephant country. We're just surrounded with high quality, large scale discoveries, of so many types and values. And you mentioned B2, Gramalote project to the north of us. Just 20 kilometers up the road from us, you have Aris with Marmato, you have Collective with their massive discovery there, and so on. So this really is an incredible, what I really refer to as an emerging tier one gold jurisdiction. It's outstripping many of the other gold jurisdictions, if not all of them, for the rate of discovery that we're seeing here. Of course, it's really cleaned up its act in terms of enablers, that being infrastructure, security, skilled labor, and so on. So it's just a phenomenal place where you continue to see significant foreign investment in and significant profit coming out of for shareholders. More specifically, as I said, we're in this region that are just surrounded with enablers. It's one of the things I talk a lot about, but it's essential to have for the success of any project. You're talking about grid power running by us, paved highways and roads into our project, access to skilled labor, to high quality consulting and contracting. It's all here. We've got the town of Quinchia next to us, hence the name of our project, 50,000 people, very strong base of operations, very supportive, very well engaged, and continue to engage with the two indigenous groups that we have. So really on the ground, we're literally hit it running and moving quite rapidly. We picked up this property around summer of last year, mid last year. It was on care maintenance for over 2 years. The previous owners decided to go back to the South Pacific, where their shareholders wanted them to focus, and they just left us alone. They were doing a good job growing it on the ground. More specifically, what you see here is the core assets of Miraflores that was originally found by Anglo and then passed a few hands, ultimately into ours. That is a small underground project, fully permitted for construction and operation now. So that in many ways has helped vet a large footprint for us on this growing project. in terms of not having any significant environmental sensitivities or restrictions. And next door to that, subsequent to Miraflores being advanced, was the discovery of Tesorito, which forms the second deposit in the PEA we did last year, over 1.5 million ounces. Now together, that's over 2 million ounces we have in current compliant 43-101 resources, forming the backbone of that PEA. The third deposit that was discovered, but we didn't bring into the PEA, is Dos Quebradas. Just wasn't drilled well enough for our view, and the interpretations our geologists have are quite different, actually more exciting. So we're redrilling this now. We've got a drill parked here doing that as we speak. We've got 2 drills on Tesorito, infill drilling, bringing its inferred resource up to measured and indicated, getting it ready for the next stage of engineering, along with Miraflores and whatever else is added. But also extension drilling. This is wide open on the south and southeast component here of it, as well perhaps to the north, which we're exploring as well, but definitely to depth, it's wide open. All 3 of these deposits are open at depth and come right to surface. So along with that, we've got a lot of other discovered potential. I say that because there's already some historic drill holes into it. We know it's there, just hasn't been drilled out. So we're very excited about getting into what's called Seabill here, right next door to these core deposits. So a massive extension of the mineralized envelope that's already discovered here, as well as this Chuscal discovery south of it. So that, along with the low-hanging fruit of Dos Quebradas, we're bringing in. And of course, to the east of that, a major front of further discovery, drill-ready targets. You know, it's very ripe for some rapid growth of our resources and discovery. And I'll point out very quickly that at depth, there's very little known here. And of course, our neighbor, our neighbor north of us, Collective, who's hit on some incredible discoveries, are in similar geology, and you know, it was only until they started really drilling to depth that they managed to really blow out and bring significant discovery value to the table. As you can see here, there's none of that happening here yet. It's early stages. All those ounces are on surface and continuing to show up everywhere we look. But in addition to fleshing out these ounces on surface and growing them, we are starting to do what we call discovery drilling to depth towards the end of next month, answering some geologic questions about what the heck's going on down here, what's feeding these systems, you know, where are those secondary, more enriched zones. So out of that, you know, that formed the basis of quite a valuable PEA. As I said, 2650, we're already at $500 million and over 20% IRR. But when you look at spot case, of course, that's approaching $2 billion post-tax and 50% IRR. So a strong foundation for what's simply in the ground today that we're growing on. And as I said, that as the basis for fundamentals and the work we're doing now to execute through 2026, moving us up the charts against our peers towards this peer group average. And of course, any way you slice this from a valuation perspective, we're undervalued, but we're also focused on capturing that and getting that delivered in so many ways that are being described here in the screen. Up against our peer group in Latin America, strong position as well. Expect to move up that curve as well as we grow the resources, switch to engineering, and really crystallize the growth of value we're after here. So really, we've positioned well in 2025, getting control of the project, getting our boots on the ground, doing the PEA, raising the funds, listing, getting 3 drills going. Now 2026 is all about us doing 2 10,000-meter campaigns back to back with 3 drills, peeling the layers of the onion, if you will, working towards understanding the scope and scale of the resource opportunity we have before committing to and switching gears into that next stage engineering of PEA and fees that'll likely take us well into next year towards then, you know, on the timeline right now, perhaps a construction decision by the end of next year. In parallel with all that, of course, it's the ESG initiatives on the ground that we're advancing with our stakeholders. So really, it just comes back to strong investor fundamentals from the perspective of the team, the asset, the economics of what's there and what we're building upon. The fact we're re-rating against our peers, but still undervalued. Great opportunity there as we unlock and crystallize that value we know is there. And cap structure, finally, it's a strong start for us. Good, strong management, insider holding. Good start on the institutional side, retail as well. essentially investors that really, to Don's earlier point, they understand the vision, they see the story, they're in there for their longer haul, and it's a great base for Tiger. So that's really a quick summary for you, gentlemen, in under 10 minutes.
Thanks, Robert. Nice job. A couple of questions for you, then I'll turn it over to Don. So can you go back to that slide that showed your kind of like timeline, couple previous? There you go. So you mentioned you have a PEA from last year, which was done at 2650 gold. It looks like you're going to proceed to PFS instead of updating that, correct?
When we say PFS, that will be inclusive of updated resources that we'll be working to put out throughout this year, starting with Tesorito. We're infill drilling it. In the process, we're bringing up the grade of it from the results that we've already publicized out there in our press releases. Is certainly showing that there's opportunity to do that. So we'll likely be bringing more grade in, adding ounces, a few more tons, and extending it, obviously, the size of that pit. So that's really going to call for an updated resource. In addition to Dos Quebradas and working to bring that into a resource, the Seabell discovery that's right next door to Miraflores and Tesorito, it's then what other discoveries are we going to find at depth? Until we get those questions answered this year, it's difficult to say how much of the existing PEA we're proceeding forward with versus any new discoveries or growth and sort of, structural changes, if you will, contextual changes of that PEA. But either way, it'll be additive and likely a larger project than what the PEA envisioned, which is really what's in situ today.
Okay. You mentioned Collective Mining a couple of times, and they were nice enough to come to my conference about a year ago, and the stock's up, I don't know, like 400% or something,
Incredible.
maybe more since then. They uplisted. They, as you pointed out, have been hitting at that project north of you. How many kilometers away is that, please?
About 20 kilometers as the crow flies. Here you'll see on the screen, just up the Pan Pacific North-South Highway, about 20 kilometers to scale here on the bottom, give or take.
Yep. And it looks like Marmato, which is Aris's ARMN, that's roughly the same distance.
Yeah, essentially next door to Collective. From my perspective, being in this industry for as long as I have, especially with majors, these are really shining stars in the gold industry in terms of value that they're presenting. Not only Aris looking to double its production up to 500,000 ounces by the end of the year, I believe they're reporting, but the Collective discovery that's there and the continued effort to grow that discovery, that's such a substantive, important discovery for our industry that I think, speaking in terms of industries, in terms of mining jurisdictions and so forth, it really does bolster, obviously, the jurisdiction we're in, and what I opened up, the presentation with, that this is really a strong, opportunity and jurisdiction for gold mining in Colombia.
Yeah, I couldn't agree with you more. I mean, I think Colombia is really flying under the radar here. It got mentioned in the same breath with Venezuela a few months ago, and maybe that soured some interest from investors, but I don't see it that way. I think Colombia, Peru, Chile, I mean, some of these markets are unbelievable values here because of the governments changing hands. And you guys have an election coming up in May, correct?
Yes, that is correct in Colombia. And, the consensus that we're getting on the ground is that it will be swinging towards the right, away from the far left, which it's been in. But I will point out, even though it's been there, that government has and continues to recognize the value of the mineral industry, particularly gold, and continues to support it, through its permitting framework, taxation, but also, issuing permits. And clearly with our Miraflores project, it got permitted around mid-24. And it's just indicative of the importance of this to that jurisdiction and country. So, all the fundamentals are there for sure.
Yeah, I agree with that. If that swings further right through the election process, then that can only help an already good situation, in my view.
That's exactly the point. Yeah.
Yeah. Don, I'll turn it over to you.
All right. Yeah, Robert, I'm impressed. I actually owned the company before you. I always liked this property. I like the economics, the exploration potential. I mean, I always thought this is a 3 million ounce property, and I'm sure that's kind of your thinking too. This is like a minimum 3 million ounce property, which those properties can generate a lot of free cash flow, especially today. My first question for you is your background. So, I like the fact you came from Barrick and Yamana. What did you do?
Yeah,
Were you just a mining engineer, or what were your titles there?
yeah, I moved through that quickly, obviously, but I well over 10 years in engineering and operations with Barrick, in pretty much all of their operating jurisdictions, but domiciled out of the Canadian North American jurisdiction as well. So, moved through the ranks there as a mine engineer into mine operations before moving to head office with corporate development and evaluations there. And obviously was fortunate in terms of timing to play, my role in the acquisition of Placer Dome and doubling the size of the company then, and a lot of stuff behind the scenes. And then, of course, working in capital projects, co-managing projects there. It was quite a ride for sure, but quite a perspective gained, not only multinational, but just multidisciplined as well, especially leading teams all over the planet, literally finding, evaluating, and acquiring projects of extraordinary value to bring into their portfolios and bring into production. More towards corp dev, well, 100% towards the corp dev effort with Yamana post Barrick.
Right. So, I mean, do you feel real comfortable? So you're in charge, so you're going to get to build it and then operate it. So is this kind of a first time doing that, or how comfortable are you jumping into this?
Well, number one is, you're not an island when you're doing this. The strength is with your team and, being surrounded with people that know things far better than you and their disciplines and what they do. And that's exactly what we've done at Tiger. And that team is comprised of folks that have, built and operated mines in so many jurisdictions. So yes, quite comfortable with that in the way that, bringing to bear the technical meets business is a, formidable package for any individual, let alone a team to have. And that is certainly the perspective we bring. And I will point out as well, just super quick, that along with that is a discipline that comes with that. It's too easy to race to market, cut corners, and so forth. When you're working with majors, you're 100% focused on delivering something that is predictable, reliable, and operable at the end of the day. And that means doing the work in the right way, but having the ability to see that vision and work towards it. So that's what we're doing. And so, yes.
Right. Yeah, just one follow-up on that. So, I mean, it's still on your shoulders. It's your responsibility. If a company fails, it's all going on you, even though you have a team around you. So, are you excited in the fact that, I mean, this is somewhat your baby? I mean, you're in charge. You're the CEO. I mean, you're going to get the opportunity here to basically, build a big mine and then, put it into production and then see where it goes. So, I mean, are you kind of like, I mean, you kind of tickled pink. It's like, okay, all I have to do is execute here. I'm going to pull this off. I mean, how excited are you about this whole situation? I think that's my question.
Yeah, it's a good question, Don. I know where you're coming from and where you're going with it. Look, the best way to articulate the answer to that is to say that, having been all over this planet, looking at things and finding and identifying projects, it really is a skill. And it's one that's developed over a long period of time. It really allows you to create a mesh, if you will, for evaluating and being quite particular about what projects have the right DNA, if you will, for success, and knowing what that means and proving that through those past efforts is really what comes to be here. So this project, when I first saw it, and began to really lift the stones and understand the value drivers. I spoke earlier about enablers. That is critical. Most projects around the globe lack one or more of those enablers, whether it's access, power, water, access to skilled labor, even the environment. And that's not something to take lightly. This is a temperate climate we're in. We operate all year round. There's no what I call wastage of shutdowns and carrying costs because of winter or super rainy seasons in Brazil and that kind of thing. But when you bring these elements together and then you start digging deeper, you look at Miraflores with a 70% gravity recovery, that's meaningful when it comes to the scale of capital and operating costs you need to be looking at downstream that you benefit from. And as well, you spoke about, the 2 million ounces we have now and the growth around that. You said 3. We're a little more optimistic, but obviously conservative and focused on that. But when you look at Dos Quebradas up here with 500,000 ounces and the potential, particularly here, of Seabell, with drill holes that are continuously mineralized from surface down to over 500 meters, grading, 0.5, 0.6, 0.7. That's a massive extension. So if we're able to, and that's why we're moving the drills here soon, map out, at least on surface in the first 300 meters, we know this runs to depth, a resource that it will look quite similar to Tesorito. So that's potential for another, 1.5 million ounces. So really it goes back to those enablers that you speak about and look for. There's other elements.
You're right.
Yeah.
I already know what the project has. I owned this before. Anybody that looked at this property and looked what it had to be, chomping at the bit, wanting to get their hands on it. The key is, how much you have to pay for it. But there, 3 million ounce gold projects that are economic are very rare. There's not very many. So if right now you go around the world and try to find something similar to this, good luck, right? So
very much
for you to identify it, that's kind of low hanging fruit for anybody with it's been in the industry a while. So I get all that. The infrastructure is solid. You guys got a road running through your property. You got other miners, all over the place. You got it basically checks all the boxes. The only box that as an investor that we're worried about is the team. You guys basically executing. This is all about this. When I look at this project, for me, it's all about execution. So on the PEA, what was the CapEx and the production per year in the AISC?
That's right here. On the PEA, you're looking at 480 million initial startup capital for a 20,000 ton a day whole ore operation, producing about 140,000 ounces over 10 years. Again, that's what's in situ. That is likely not what this project is doing. However, Don,
sorry. Yeah,
go ahead. Yeah,
sorry to cut you off, but we only have a few minutes, and I have a question. So, what year was this created?
September last year.
So, but you just started trading in December. So you were able. How long have you been working on the project?
As I said, we got operatorship around mid-year, June last year. That's when we got our boots on the ground and started to work up the PEA.
All right, outstanding. So, those numbers are all good. Those all work for me. So, permitting, you think you're going to be able to be construction ready by the end of 27? So that means how confident are you that it'll be fully permitted by the end of 27?
That obviously depends on what we're adding to the pot and what we're looking to permit, right? Obviously, we're focused on growth for that. But right now, with Miraflores fully permitted, and the fact that once you hold a permit, it means that growth of that permit is considered a permit modification, which has a shorter timeline for permitting, despite the fact, obviously, you got to do the work on the EIA side and bringing engineering up to feasibility. It's something that is tenable for sure for us. But again, it's subject, as I said, to the scope and scale that we ultimately define this project to be by the end of this year.
Okay. I just had two more questions. The first one is, what did you guys pay? What's the option? What do you guys
It
still
was
owe?
10 million Aussie dollars in one, two, three payments. So we made our first June. That's what got us operatorship of a million Aussie. We just made a $2 million payment in February. And we've got 4.5 million Aussie dollars in June. And
Did
at that
you give him
point,
any shares? Did you give him any
no,
shares?
no, all cash.
Wow.
So that'll be
Unbelievable.
100% ownership. So Don, you're right. You know, timing is everything. Sometimes you get lucky too. I think we got both here. Timing was good for pricing. We did get lucky. We got in early on this before they actually shopped it to hardly anyone, which was
Unbelievable.
it
Unbelievable.
was.
Are there any NSRs on it?
There is a 1.5% NSR to a third
That's
party holder.
that's basically nothing, right?
There is a buyback to that as well.
Okay, last question. Insiders. Now, I consider an insider as any long-term investor that basically wouldn't accept like a 50% premium. How many of those do you guys got? Percentage?
22% of our outstanding is with management and insiders. And I would add another 30% that you'd almost consider that as close strategic holders and partners of the company within the rest of the pot. So you're looking at a very
friends and
strong
family?
control of it, probably at least 50%, you know, tightly controlled.
Yeah, that's what I want to hear.
Yeah.
Yeah, so like I said, that's the reason why I started with questions about, you know, your background. For me, this project, it's really going to come down to only one thing, and that's execution. Because
You're right about
as long
that,
as the
Tom.
price, as long as the gold price stays at 5,000 or even 4,500, this project's going to make a lot of money. So it really comes down to that. Maybe political issues, but I don't anticipate that. There's a lot of people mining in Colombia right now. I think it's in a good location, basically mining district. I love the exploration potential. I think this thing's got 3 million on it all day long. This thing prints out as, like you said, you showed on the slide that it's very, very undervalued. I agree. This is one I'm gonna have to take a close look at. But it looks really, really juicy, and I really thank you for coming on and showing us the story. This is something that people really take a look at. But thanks, Robert.
I appreciate that, Don. I appreciate your questions and opportunity to be here. John?
Great. Yeah, of course, Robert. Thank you so much for coming on. So, Don, yeah, you just pretty much provided the summary. So I'll just throw in a couple of things. 10 million all cash, no shares paid to own 100% of this project. Pretty sweet deal. If they did that today, it would not be 10 million bucks. It wouldn't probably even be 20 million bucks. So, like Robert said, timing is important. The PEA was last year, but it sounds like, they're just going to move right to a PFS and into 2027, a construction decision. So, proximity to Collective and Eris, those tickers are CNL for Collective, and Eris is ARMN. Both are kicking butt this year and last year, and they're 20 kilometers away from both roughly. So that's encouraging. Costs seem to be under control at a 1340 ASIC, more than under control with 4,500 to 5,000 gold. So looks really interesting. I like the jurisdiction a lot. And anything you'd like to add?
Yeah, I mean, for me, this thing looks like a slam dunk. I mean, my goodness. I mean, it's construction decision end of next year. I guess the one red flag is, you're not going to probably get any production until end of 28. And it might even go the middle of 29. So I guess waiting for production is probably the red flag. Maybe they missed this bull cycle. I think that's a possibility here. But as far as risk reward, I mean, paying $84 million, that's what they're fully diluted, is pretty cheap for a project of this quality.
Yeah, I agree. And yeah, I do hear what you're saying about investors would need to wait for production. However, I think with this kind of an ASIC, if this, even stays somewhat close to 1340, I mean, it's going to go up a little bit, but anything under 1900, even if gold goes back to 4,000. Like, I mean, I just see too many banks now. UBS came out today, 5,900 gold. Like, I mean, there's more and more large, reputable people saying 5,400 to 6,000 is the range this year. So,
Yeah.
to fall from 6,000 gold to 4,000 gold in a matter of like a year and a half, I just don't see it.
Yeah. The one thing about this project, since it's so cheap, I mean, this is a stock that can double to 160, double again to 320 easily, just because it's so cheap, right? But the big rip, if you will, when it really takes off is when, they begin construction kind of thing.
Right.
And so that could be early 28. They said that, construction decision, but before it actually gets into construction, I could see this thing easily doubling and doubling again, just because it's so cheap.
Right. Yeah, they just launched their U.S. ticker, TGRGF, like a couple of weeks ago. So I mean, it's just breaking into the U.S. market as we speak. So thanks, Don. I appreciate the insights, and we'll leave it there. We'll mention our conferences here. We've got one in Washington, D.C., May 17 through 19, and then Four Seasons, Fort Lauderdale, Florida, May 20 through 22nd. Going to be phenomenal. We've got tremendous investors lined up. We've got a really interesting group of companies coming. Tiger is coming to one of those events. We're trying to show investors these kind of value-oriented stocks now in the cycle, not in 2 or 3 years when everyone's talking about it. Don, thanks again. And thanks to our listeners. Take care, everyone.